Welcome to Wise Beyond Bitcoin, where you come for education, analysis, and opportunities in blockchain and crypto. My name is Lucas.
And my name is Ryan.
And we've got a lot of great information. We've got some information about what's going on in the world. We like to share a little bit of this, a little bit of that, how the world economy at large, it's all correlated and connected. Obviously, if the stock markets are plunging, you're not going to have a huge bull market in crypto, because where's the money coming from? It's
Risk off sentiment.
Yeah. This is not financial advice. It's not any kind of advice, not legal advice, not medical advice. This is just educational, entertainment, information. However, we're going to kind of walk you through what we feel you can expect from our experience, having been around crypto for a few years, and our experience has gone through some ups and downs, and the best ways that one can ride this out, strategies that we employ to ride this out, and just kind of a healthy, mature, long macro mindset to take. And it's just an opinion and perspective. Wouldn't be surprised if our perspectives are off the mark or wrong, but better safe than sorry, and proper planning prevents poor performance, as they say. So with that, this is a nice little
lots of red on the charts. We normally don't focus on the mainstream stock markets, financial markets, because we're crypto enthusiasts and that's what we're into. But it is good to keep an eye on what's going on in that part of the world, because these things are linked together. And as goes the financial markets, so tends to go crypto. And so, with that in mind, we kind of wanted to take a look at what are the factors, what are the concerns that are leading to the sell-off that's happening in both markets, right? Mm-hmm. So obviously the coronavirus, the Omicron variant, has got people spooked, and the other big factor is that inflation has really taken policymakers and Federal Reserve, scientists and economists by surprise, and it seems to be getting a little worse too this month. So the watch is, what's the Fed going to do, right? And there's a meeting coming up in just a couple days, I believe Wednesday. There's a meeting, and there's going to be a decision made on interest rates and on Federal Reserve policy. And the thinking is that probably not going to have a change in the target rate of low rates below from 0 to 0.25 is where we're at now. So the thinking is that we're going to stay there. Very small amount of people on the FOMC saying that there could be a rate hike of anywhere from 1/4 to 0.5%. But the notable thing of this chart is that you can see the change. You see that as we've learned over the last few weeks, how inflation has kind of become more and more of a problem. The weight that we're putting on the chance of a rate hike is going up. So back in November, it was very small. And in the beginning of December, still very small. But then as we got into December, some of the inflation data came out worse than expected, and continues to be, worse than expected this week. And the Fed came out and said, hey, we're going to have to revisit this transitory inflation narrative we've been selling. Inflation might be worse than we think. It might be rooted. It might be taking root. We might be having inflation expectations take hold. And if that's the case, then the need to respond becomes a bigger need. We have more of a need to respond to that, right? And so that's why you're seeing the change in the prediction of the possibility for a rate hike.
Now, long term, you hear a lot of people in the crypto markets, but that's why we like to bring our macroeconomic perspectives and outlook. A lot of people say, oh, inflation, it's going to rock prices in crypto. Well, that's true in the long run. Inflation would have, a positive impact on bullish prices on digital assets. However, when you look at the short run, a lot of the stock market, a lot of business decisions have been made on these interest rates. And when that changes, before that inflation comes in, there is a correction that has to take place, decisions that need to be readjustments that need to take place, new rates. And
that upsets those previous plans.
And that causes a lot more, I feel, downward pressure on prices before any kind of inflation would take
Right.
over.
I
And
think you're right. I think that the market's more scared of the response to inflation being higher interest rates than it is to any kind of than it is of inflation itself. It's really what's coming, what results from it in terms of the changes in interest rates and how that, what that means for stock prices and debts people have made previously, and all of the above. So with that said, let's take a look at the links between, or with the possible links between crypto markets and financial markets, because that's what we're here for. We're looking at, and we're really focused right now on Bitcoin, because as Bitcoin goes, it seems to be that the rest of the market follows, right? So it's hard to imagine a narrative where the alts are doing well and where DeFi is pumping and where Bitcoin's just crashing, right?
right.
Like that's a hard narrative to imagine. So, and that seems to play out, right? Bitcoin's almost like the canary in the coal mine, and then as it goes, so does the rest. So with that in mind, we're taking a look at the chart, of Bitcoin on TradingView, drawing some lines, and just taking a look at some historical nuances about where we're at right now, and where we could potentially go. And so I just to take a look, we've kind of come off this high of around 67,000, 68,000, and we've come down so far right around 38. Well, forget the candle. We'll just go to the body of the candle. We're right around 32, somewhere around 31, 32% down. And just to compare, the last time we had a significant sell-off, it came to about 55% of a correction. And then it also looks like it lasted, around 9,800 days. So just to give you an idea, we haven't really, in our view, there's potential for further weakness. If we went to 55%, that would bring us down to around 30,000. And if we drug out the time into a similar timeline, that would put us out to around February. So we could, now nothing, is exactly the same, but just to give you an idea of what the last correction looked like, this one seems to be, would you say,
Now, this
midway on? It's definitely not the end.
yeah, historically, the pattern of Bitcoin crashes, these cycles, digital asset crypto volatility, is that they can go 80%, 80+%.
Yes. And that's what I want to highlight here.
And so that's, yeah. And I'm glad you're showing that, because I want to give people, if they're new to crypto in this market, an understanding of just how to prepare and what to expect. You don't freak out when the snow comes and all your plants are dead if you prepared for winter time by harvesting in the fall and putting things in the root cellar and
Right.
packaging.
It's when you're not prepared.
It's just when you're not prepared, you're taking off. So we're just want to share this to help prepare you if this is your first time going through a cycle like this. And if it's you're not, just to share our perspective, and you can drop in the comment, how you feel it will play out. We don't expect to get it right. I never predict when it's going to stop raining or exactly when it's going to start, but just to have an idea that there's cloud cover
and that 30,000 Bitcoin, it's on the table. It's not a foregone conclusion, but you shouldn't rule it out either. That's kind of what we're trying to say here, right?
Yeah, I expect it. So my opinion is that, and I've been feeling it for a couple of weeks, for a little while now. And some people have been obviously feeling it and called it a lot longer, but where we're at now at this time of the year in December,
right,
and somehow we just kind of barely kissed that previous, that high that it's just barely,
you're right,
come back to throughout the year. I feel that it's just puttering out. And this is the time of year where a lot of people selling for the holidays. They need to come up with money for gifts and family. I don't see, you look at the market news with interest rates. I'm just kind of wondering where, even if you live in fantasy land and you believe it's just going to just go up to 100,000, where's the money coming from?
Right. Oh yeah, that's for sure. Because
who we've had Michael Saylors, we've had El Salvador's, we've had countries and billionaires buying all of this. So if that's not going to be driving the price, I mean,
what's the next push going to be, right?
What's the next push going to be? And I think at this point,
and I'd add one more thing to that. it's not every day or every year or every 2 years or 3 years that you enter into a Fed's tightening cycle. These are kind of like every decade, if not longer, events, right? I mean,
Volcker,
and
Paul
yeah,
Volcker.
yeah, for sure. And we're not saying that we're going to have 70s style hyperinflation that's going to require double digit interest rates to snap us out of. That would be insane if that happens, and I don't want to see that happen.
But we're not saying
But
it's not possible
but
either.
it's not possible, sure. But what we are saying is that there's a lot of headwinds, that are going to keep, I think, pushing prices downward in the short term. So what do we want to pivot to talking about maybe what are some of the opportunities, because we talked about some of the risks. Well, what are some opportunities that we're fans of?
And to mention that right now is a great point in time.
Mm.
We're not traders. This isn't trading advice. So we never try to time the tops and the bottoms perfectly. It's just kind of getting an understanding of the trend and the flow of the market, where things are going. And this feels like a good time if you've been in. We're very still close to the top. I mean, 47,000 is not too far away from
True.
Especially when it can easily go down to 30 or even below. I can see it hit 28 or
25. Yeah.
So and think about that. It may sound drastic to someone looking at 47. Oh my God, that sounds horrible. But it's really not if you look in traditional financial terms, right? Like the high was $20,000 in Bitcoin. And that was just when in
a couple of years ago.
Just a couple of years ago. That was the
And
I mean, that was the parabolic high, 2017, 2018, around the same time. So it would be about 4 years ago. So about 4 years ago, it reached a parabolic $20,000, which at that time was just,
it was seen as being,
that was crazy because that was
bubble. It was seen as being like mania, right? People were
summer. I remember that the summer was around just over $2,000 for Bitcoin. Right. So in just a few months, it had gone from just over 2,000 to 20,000. Yeah. And that was in a few months. So many people don't remember because they weren't around or paying attention to the markets then. But so to correct down from 4 years after that to where your new low
is the old parabolic top.
Is the old pair, even if it went all the way down to $20,000, even if it did.
You got to put it into perspective and say, wow, this is an amazingly appreciating asset, even with the volatility, just to draw lines between the bottoms.
Right.
And just look at what the growth is. And it's amazing.
Incredible. So I don't feel, I think I mean, the reality is back in 2017, 2018, you still had most of the world ignoring that the technology existed, except to mention that it was like on some dark websites or didn't exist for
facilitated crime.
Right. Yeah. And it wasn't really talked about with seriousness. And now you've got countries talking about it, adopting it and using it. Right. And we've got in stock market, you got companies.
The banks are working with the FDIC and the Fed to start to integrate it for their own customers.
Traded companies that are
ETFs,
that are open intermediaries of digital assets and banks for them. So in countries all around the world. So it's a different playing field now. In fact, these are kind of the floodgates that crypto enthusiasts and people have been hoping for a long time. And these things, these gateways take time to develop. So I can imagine that whenever this shakeout correction phase ends, what you're going to be left with is this infrastructure that has DeFi, NFTs, gateways, fiat on-ramps, and decentralized exchanges all over the place. So that's where you get your
the next move up.
Your next move up, right?
Sure. Especially with the gamified metaverse, bringing in that whole ecosystem of game players and maybe not have a foot in with DeFi yet. Yeah.
And that being said, one of our things to say is that, yes, protecting off the table, stable coins, other digital assets to protect you from the volatility, but it's a great time also to compound. We did a video on this, to compound your returns in those that you're a part of. Also to, oh man, it slipped my mind. What was to
take profit. If there is profit to take, it's not a bad time to get in or to get out, right? Depending, well, not to get out completely, but it's not a bad time to realize gains.
That's
If you
true.
look at the chart, look where we're at. I mean, we're at at 47,000.
That
That's
that, that
that's
is
not
the
a bad place if you got in any time and that
that
wasn't
is
in
one of
this.
the main points of our video we
You
wanted to
know,
say. You're right. It's
yeah,
that we're at a pretty beautiful time right now in crypto where if you have been waiting for a good time to start entering, this is it,
yeah.
because you're not at the all-time highs.
No,
You're
you're
not
not buying
you're,
tops right
you're not
now.
buying tops. You're already buying into the correction. Not to say just go all in now,
Right.
but it would definitely
More
be a
like
good time.
more like buy the dips from here on out in the next few weeks, because
Sure.
that's more probably what we're saying.
But if you've been in for a while and you've been able to enjoy some good returns and profit, this is a good, pardon
Not
me,
a bad time to take profit, right?
not a bad time to move into more stable areas of DeFi, which we kind of want to talk about
And
in
that's a
the.
good segue.
Yeah.
So I know Curve, well, Avalanche is Curve, Avalanche is an awesome chain. We're big fans. And inside of Curve, there's a pool that's for MEM, USDT, and USDC. You get an LP. And with that LP, you have some options. And I know Lucas has been a big fan. We've been both big fans of Abracadabra. And we recently have taken advantage of this opportunity here where you can deposit your Curve V2 LP that you just bought, and you can actually earn 12.9% paid out in Spell, which is that's the Abracadabra token. So that's one option. That's very safe. Right now, it's the speculative element would be in the payment, because the Spell, who know it's speculative. We don't know where a Spell is going in the long term, but so you're not earning stable coins. There is a risk in that. But Spell's, it's MEM and is done very well, continues to grow, and the team behind Abracadabra is innovating, keeps developing. It's a very strong team. So the odds that this is going to just dump is probably, I mean, they're not financial advice, so do your own research. But if you're going to earn, a token, this isn't the worst one, I wouldn't think, to earn.
If you, we've been following them. If you look at the head developer of Time Wonderland,
Mm-hmm.
he's just a rock star of what he's done and what he's doing, making progress in growing the treasury and liquidity for the community. Talking about maybe collaborating with Sushi Swap and creating more complex protocols.
Mm-hmm.
I think, what is it?
Well, they're definitely a force for interoperability
Sure.
cross chain and realizing cross chain projects together, building bridges. That's one thing you could say about Abracadabra. They're on Avalanche, Binance Smart Chain, Arbitrum, Phantom, Ethereum. So you can take anything from any of those chains and bring it over here and make use of it in some way or another. That's very cool.
If it's bounded liquidity or if it's stock
Protocol owned liquidity
or something. I believe that they were trying. Had an idea of adding some kind of new dynamic to Sushi Swap to make it more dynamic.
Got you. Maybe it's the bounded liquidity like Uniswap.
Yeah, and using the treasury of Time in Wonderland to kind of take it over. And
nice.
So, but the point is, he's looking to be innovative.
Yes.
He's to help. So he's looking to help build bridges in DeFi, right, to solve the liquidity issue when a lot of DeFi for many years had been dependent upon centralized stable coins as the bedrock of.
That's right. And
really,
this is a bit of a move away from that.
This is a way to help create, because you're going to have to be ready when someone pulls. If all of a sudden those training wheels come off, you have to be ready to ride. And these DAO reserve currencies, they're building these large treasuries that can be there with a stable coin,
yes,
to support the DeFi ecosystem when Tether or USDC or DAI, these others, for some regulatory random reasons may
right, could be shut down
or take a haircut.
X, Y, and Z. Yeah. All kinds of things. All kinds of possibilities.
Is now worth 60 cents on the dollar.
Sure. Right. Some kind of a some sort of a rebasing in a way that you're not going to be a fan of. Well, moving on from Abracadabra, you can take that same curve LP that we showed you how to get here, and you can bring it over to YieldYak, which is another Avalanche ecosystem protocol, and you can deposit it and earn 17% APY. Now, what is different about this that we like is that you're not earning spell, you're actually earning, you're compounding your position, right? In on these three assets.
Into the
So
LP.
and the LP, yeah. So that's what, and that's cool because now you're taking away a little bit of the risk of wondering, well, what's spell going to be worth? You know, what am I really earning in real terms right now, right? Versus we're in this protocol, you can just figure that out relatively easily. It's 17%. So that's cool. Now to move away from Avalanche, or do you want to say something else? Yeah.
Yeah, just to what you just showed everyone
Mhm.
with Abracadabra and YieldYak. Let's say you're on Phantom Network. You can do the same thing on Abracadabra. I know we've shown this in one of our videos.
That's right.
But on Phantom, there's a curve 3 pool. So if you're on Phantom and you want to take some off the table there and park it at a good rate, is it grim.finance? Is that the auto?
I think it is, or it could be Tomb. I think one or the other.
Tomb is a different
Okay.
awesome protocol on Phantom.
I think it is Grim.
And it's Grim. So you can go to grim.finance and it's an auto compounder.
Yes.
You can take your, just like you can do it here with YieldYak, instead of taking your curve pool token to Abracadabra, you can take it to YieldYak on Avalanche. Instead of taking it to Abracadabra on Phantom, you can take it to grim.finance. And instead of earning Grim, or instead of earning spell,
it auto compounds.
It auto compounds so that you,
so very cool. So check it out. And another one is that we're huge fans of is, well, the Lunaterra ecosystem, and then Anchor.
Huge.
And here you can earn a 19.49% APY, just simple staking UST.
Simple locking up your UST on Anchor. They've been around for a while. They've got a solid team. It's been a solid protocol, bedrock of the Lunaterra ecosystem for quite some time. And you know, I don't have any alpha spoiler alerts because I really just forgot everything I heard them talking about the other day when I was listening in on it. But they are working on a lot of stuff, and they've been, you know, part of the massive growth of Lunaterra over the last year, and it's been quite successful. I mean, I'm a huge fan. We're huge fans. The fact that you have a stable coin that's behind part of a decentralized blockchain protocol instead of a token that's owned by a centralized,
that's huge.
That's a big deal in and of itself. I love that we've seen UST be adopted into the MIM ecosystem on Wonderland and many other DAO reserve currencies. We've seen UST Luna has gotten some love all over the DeFi ecosystem. And it looks like there's Astroport launching on Lunaterra. There's a whole bunch of really neat things that we'll be covering. So the Lunaterra ecosystem is vibrant, and right from your wallet, in your own wallet, you can swap in and out of UST to Luna.
Yeah, really, and cheap. Doesn't cost you an arm and a leg. It's great.
You don't even go to another chain, go to an exchange. You can just swap right in and out of Luna to UST.
And we do have videos on IBC and Luna, and IBC more specifically, or more generally, and how awesome that ecosystem is. We also have videos on crypto safe haven we did a few days ago, talking about some of these same things plus others. So there are, and we also have a video talking about the profit taking and the macro outlook, which we updated you on. So yeah, there's all kinds of cool stuff. The secret network video is really good. There's a secret, there's a stable coin coming out on Shade protocol, Silk, right, on secret, which we have talked about. We will continue to talk about. So
we got a video coming out on that.
Yeah, video coming on that shortly. So just kind of wanted to touch on some stuff that you might want to take a look at if you're on in a risk off mood, which I think many of us are, given what's going on with the Bitcoin markets and what's going on with the Fed and what's going on with coronavirus and just all of the above. So I hope that was helpful. What else? You got anything else you want to add, Luke, on the way out?
I'll say this. I'll say we are long-term very macro bullish on digital, the cryptocurrency blockchain ecosystem, which is why we love doing and sharing what we do. And it's our goal and intention to continue to share developments during the corrections in the bear and the bull. It's often during the bear cycle and during the corrections that you can find the real gems and the projects that weren't hype, that actually had solid teams. So another thing that I recommend that we'll be doing if you want to keep up with us is play to earn games, NFTs, secret network. We've got some really cool secret network, IBC system, ecosystem. There are some protocols are just about to explode with what they're creating and producing. And so, NFT, you look at play to earn gaming and stuff like that. I would say this is the time to learn and get involved,
Yeah.
experiment and to have fun with
Don't let the emotions drive you away from what, the long-term gains that are in the protocols that are innovating, because that's going to continue.
In fact, if during those times, if during those correction bears, if you're playing the play to earn games or you're experimenting in different projects and looking at what works, you'll get a feel of which projects have good communities and have good development and are clean user interface and are actually working. So that's when you're saying, hey, you know what? I get a good feeling about this. And sure enough, you follow that, do your own research and the feelings that come along with good research. And most likely you'll be
pay dividends, right?
In some way
on the next bull market,
even if it's a learning lesson.
Indeed. Which that we have a few of those. So that's inevitable.
Thank you for your love and support. We love sharing with you guys our research and perspectives. As enthusiasts, we were monetary nerds before blockchain and crypto came about. So this is really a fun time for us and we love learning. So if you know about a project or something happening that you think would be of interest or for us to share, drop in the comments. We'd love to look at it and subscribe, hit the notification bell. I guess that about covers it.
That's it. Thank you.
Until next time, have a beautiful day and namaste.